All right, guys, inflation numbers are out and it hurts. It hurts again. The Dow falls 880 points as inflation hits a 40-year high. So, taking a look at this, with the Dow falling off like this, consumer goods closing, that was the most terrible sector today. They were guessing 8.3%, and it ended up being 8.6% year over year, which is just ridiculous. Those numbers sent investors reeling. If you have any money on the market right now, investments are getting hit hard. Anything that you're in for a long time, this is why I tell people when they ask me, do you just invest? Do you just trade? I do both. For me, that has been the best situation because I can take advantage of the volatility with trading as well as take advantage of the long-term trends through investing. Now, if you're wondering why I'm wearing a beanie in June, it's because my hair is ridiculous. Maybe at some point I'll show you. It's really, really long, really, really messy. This is the time of year where I let it grow out a little bit and then I shave it all off and look good. So just in case you're interested in that. Now, this is inflation data all the way back to 1914. So we've had a number of situations where this inflation has hit much higher peaks, but you'll notice that this isn't really that out of range and we're not near the top, in my opinion. Even if they raise 75 basis points like they're talking about, I still think it's pretty crazy. I also find this interesting. I left in the trend line and you'll notice that, it's about 3% is average inflation over the long-term trend, but it's trending up towards about 4% with the Fed mentioning that their goal is 2%. So I find that super interesting. I'm going to include a link down in the description below to this chart, but I want you to take a notice. I mean, we have had crazy inflation over the last little bit, and I don't think this is going away, folks. I think this market volatility is going to continue based on this inflation. Okay, before any political hacks come after me, I don't share my political views on this channel because it's none of your damn business. On top of that, everybody's getting screwed right now, regardless of which party you prefer. So let's just keep it civil and let's just be honest about this. Every politician is this way. When it goes good, it's their fault. When it goes bad, it's not their fault. This is one of the most ridiculous and unsubstantiated tweets I've seen in a while with Biden's plan, okay? Let the Fed do its job. That's what the Fed's supposed to have been doing ever since inflation took off last year. Just saying. Lower everyday costs for Americans. Okay, what does that actually mean? Can you give me any kind of detail? I know this is just a tweet, but where is this plan in detail? Keep reducing the deficit. Has the deficit actually reduced? I'm not 100% sure on that. Comment down below if you know, but I don't think it actually has. By taking these steps and with Congress taking action, what action has Congress taken on much of anything in the last, decade? Not very much, guys. And again, all I'm pointing out is there's not a lot going on. I don't see a lot of what's actually taking place to stop this from continuing. And again, if you think I'm carrying water for one party over another, go for it. You say whatever you want. I don't really care. All I'm saying is if you can break it down and articulate what the plan actually is, I'm on board for these types of things. But again, looking at the Fed, what has the Fed done besides kind of let everything run as is? And ultimately, how do I end at this opinion? The Commerce Secretary says the brutal reality is that there isn't very much to be done on gas prices. Really? There isn't much you can do. Okay, regardless of, again, the why or the what, there is plenty that can potentially be done. The question is, are you willing to do anything about it? That's all I'm saying. Oil and gas contracts earlier this year were getting shut down. Keystone XL got shut down. All of these things are happening and they're saying, hey, buy electric. Let's be honest, people. I don't know about you, but quite a few people I know are doing okay, all things considered, but not everyone can afford a Tesla currently. I know there's other options starting to come on board, but we're still years away from this energy alternative situation. And right now, the people getting crushed are the people who have to go for work. I'm fortunate. I work remote, working in tech. So for me, gas prices aren't that big of a deal because Most of the time, it's either my wife running my kids to school, or we're running a few errands, but it's all close by and convenient because we live in the city. But if that wasn't the case, that could be very, very different. Okay, so what does this all equate to in regards to investing? Let's talk about that. I want to break down again, and I'll share the link down below to what I've looked at based on studies from the past 40 years. All right, so which sectors perform the best in regards to inflation? And again, look what tends to be the most likely, has a high probability of beating inflation with positive returns. Energy, equity REITs, consumer staples are getting crushed today. Utilities potentially, healthcare stocks, they're kind of one-offs. But if you're looking for what stocks might be undervalued or may overperform, this section is where you want to focus. Now, I like to diversify with the precious metals and mining personally. That's just kind of how I feel. Look at US equity markets. Again, this is from 1973, so it's actually basically 60 plus years of research rather than 40, like I stated before. But all I'm getting at is this is where my focus is outside of my day trades. Do I think this inflation keeps up? Yes, I do. Do I think markets still have a long way to correct? Yes, I do. Do I think there's still a lot of potential economic problems headed our way? Yes, I do. That's my personal opinion. Guys, I'm as big a bull as anyone on the market normally, but I think it's gotten out of hand over the last couple of years, and especially with that recovery after the pandemic started and now where it's at, I still think it's going to get hammered. That being said, I'm still investing in my 401k. I'm still investing in my Roth IRA. I'm still looking long-term bullish on the market because I do believe it'll come back. I'm buying things at a discount in my retirement account. Trading-wise, though, I'm focused on puts on the overall market. I'm focused on puts on specific overvalued names, which currently I'll be putting out a video soon with kind of those particular names that I think have a lot longer to fall. And on top of that, then I'm day trading either up or down depending on the day. But again, this all ties back together to me saying I don't just play long term. I don't just play short term. The more I play, the better I do. And that's how I'm protecting myself in a high inflationary environment, that even though my 401k is getting hit, in general, my trading has done decently well because I'm willing to play the market both ways rather than just one way and be stubborn and lose that money. It's kind of like the dot-com bubble or the 2008 financial crisis. Regardless of what it is, I don't care if you're a bear or a bull in general. The fact of the matter is markets are really bearish right now. That's just the fact. That is the world in which we live. And I don't think the administration is doing enough to combat what's going on. Therefore, I think it'll continue for some time. Eventually, we'll hit a bottom and it'll turn around, start going right back up. And I hope to have more funds to put on the market at that point and really ride it on the wave up. But what do you think? What are you considering when you're analyzing the market? How do you feel about the inflation numbers? Me personally, I'm a little bit nervous about how high this can go. Anyways, that's my thoughts today. I appreciate you stopping by. I hope to see you again real soon. Bye.